Hi, my name is Vishal Subban and today we are going to talk about the dark cloud cover pattern. A dark cloud cover pattern is a bearish reversal two candle pattern at a top. The first candle's body is large and green and the second candle's body is large and red. The second candle should open above the upper shadow of the first candle. In layman terms, the prices should open with a gap up and then the prices drop and should close well within the first candle's body, preferably below the 50% mark. The deeper the penetration of the green candle by the red candle, the higher will be the probability of this pattern working in our favor. This pattern signals weakness in the uptrend. This pattern comprises of first day opening near the lows and closing near the highs with an average or large size trading range, and the second day includes a large red candle forming a dark cloud over the previous day's candle. We can use this pattern to either create a short position or exit long positions in the market. The buyers push the prices higher at the open, but then the sellers take over later in the session and push the prices down. This shift from buying to selling signals that a price reversal to the downside could be forthcoming. I hope you enjoyed this video. Now let's look at an example.
Here is the daily chart of Adani Ports. As we can see, Adani Ports formed a classic dark cloud cover after a strong move up in price. Look at how the prices fell after the formation of this dark cloud cover pattern.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.